Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. We're going to look at the weekly time frames and zoom in. So on the weekly charts, we have inside bars and tightening ranges on SPY, IWM, and QQQ. And what that shows us is some sideways trading, and we're going to look for these inside bars to break this coming week. The bulls certainly have favor as we close near the high of the week. And on the daily time frame, our line in the sand to maintain the uptrend is 260.66. So I can say going into next week, very simply, to keep things nice and organized, if the bulls hold 260.66 support next week, they remain in full control. They remain just fine. We have key earnings approaching this week. We're heading into the thick of earnings season for the tech sector. We've got major names, Amazon and Apple and everybody else coming up aside from Netflix. That's going to have our impact short term. If we have bullish reaction to the tech sector earnings, we're going to head up into the 270s on SPY. If we have a bearish reaction to these earnings, we're going to lose the daily uptrend and see the weekly consolidation that so many people are looking for, but obviously has not happened yet. When we lose the daily uptrend, which will happen eventually, we're going to look to pull back and form a weekly higher low of support because this bounce has been so significant. So on the daily time frame here, I started to scale into a hedge position, and I only entered one position, so very small, and ended up exiting at a small loss once I saw the daily inside bar break bullish, once I saw the bull flag set up. And my reason for exiting rather than just continuing to scale in is at this point, I can either patiently wait for a loss of 260.66 to lose the daily uptrend and shift that momentum, or if we get that bullish reaction, I'll begin scaling into that hedge into the low 270s. So basically just starting with a fresh, clean slate again after a tiny loss, and still interested in hedging due to the way that this weekly chart does look and the likelihood that we will set a lower high compared to 280.40 and need to consolidate from there. IWM, so the weekly inside bar is the same. We have our clear line in the sand of support, which is similar as well on the daily chart. And there it is at 143.46. And as far as resistance goes, the bulls want to break the high of the week first thing on Monday, 147.92. So very similar to SPY on the daily chart. SPY wants to see a break of 267, we'll call it, and going to test that first thing next week as well. So in a tight channel the last 5 days, a break is imminent. QQQ, weekly inside bar as well. Daily chart, same thing. Higher low is down here at 160.32. And how we break, or how I should say, how we react to these earnings is going to determine whether we do see a bull break and continuation or whether we drop down and lose this support. As you can see, all three of these names are pretty much identical where they stand on the daily time frame. XLF is a little bit different. It's not a weekly inside bar. We did get a higher high on this candlestick. The daily chart did see continuation on Friday, so that's a distinct little difference there. We have the same line in the sand of 25.44 support, but we broke 26.03 and hit the high of the week on Friday to wrap up the week. So the bulls still strong in the financial sector, still responding bullish from their earnings. And if the tech sector were to do something like this with a bullish reaction to earnings this coming week, then again, the market is going to continue higher. Checking in on VIX. So VIX closed down at the low of the week, and we're close to another leg down here. The daily time frame just established a new resistance level at 22.02, and we're testing 17.17, the lowest price we've seen. If we break that 17.17 level, we're going to be looking down at 15.94 as the next support level. And you can see how inversely correlated it is. Everybody that we just looked at had a support level established and was testing the high of the week. And here we have VIX with the new resistance level established and testing the low of the week. So nice to see that everybody is correlated and doing the same thing. But at this point, regardless of whether or not you think that we're due for a pullback and this bounce is very extended, it's fighting the trend. It's fighting the daily trend at this point until that daily trend is lost. And again, with such an important week coming up for earnings, it's pretty much earnings that are going to dictate which direction we head this coming week. So that's what we're going to be paying attention to, our line in the sand of key support. We'll continue to check back in throughout the week, and I hope you have a good rest of your weekend.